and welcome back, traders. It has been such an incredibly long time now that I have not posted on this channel. I can assure you that I've been very busy on my trading journey, and I haven't stopped backtesting in all that time. So thank you so much for those that are revisiting the channel after such a lengthy time away, and welcome to those that are here today for the first time. As I mentioned, during my time away from the channel, I didn't stop backtesting, and I have found some unbelievable strategies in that time that I'm looking forward to sharing with you all. So make sure that you've hit that subscribe button for me so that you don't miss any of the upcoming backtest videos, and if you could hit that like button for me as well, it really does help me out, as I give all these backtested strategies away to you guys for free to help you wonderful traders. Now today we are looking at one of those really strong backtested strategies, and that is the Dual RSI Indicator Strategy. I believe it was made popular over on the Trade Prime channel, and I will leave a link to that in the description. But I backtested it over the past 12 months of historical data, and I'm going to be providing you with the results for that at the end of this video, so make sure you stick around for that. But to start, let's discuss the strategy and show some examples of it. Start by taking a look at the RSIs, as they're the most important part of the dual RSI strategy. So what you want to do to start with is you want to come up to indicators, and you want to just type in RSI, or and it will come up. It's the relative strength index that you want to put, and you want to put two of them on your charts, just like I have here. Now basically they represent two different things. So firstly we've got this top one, which for me is representing the long-term trend, and below we have the short-term trend. Now basically what we're looking for is we want to catch price when it's in a long-term uptrend, but in a short-term pullback. So what we're looking for basically is something like this. We want a long-term trend looking like that. Let's make that yellow, and this will represent our long-term trend. So price is looking like that, it's pushing up, it's strong, and then our short-term trend will look something a lot more like this. We'll make that black just to represent our short-term trend below. So we're looking here to try and get in somewhere around here. Now the way that we do that is we're looking for two signals, one from each RSI. Now I'll just open up the inputs first. So these are the inputs for the long-term trend. We've got an RSI length of 7, which is about half of what the normal standard is, I believe, and we have the time frame set to 1 day. That's really important because, like I say, we're looking for the long-term trend in this RSI. Style-wise, so this is also important. We've got an upper band of 60 and a lower band of 40. That's the grey area that you're seeing represented here. That is really important because that's going to play into whether we're considering price as bullish or bearish or sideways, basically, and it's going to keep us out of those sideways long-term moves. So then if we come down to the short-term trend, I'll just put us straight into this. So same RSI length, the time frame this time there was going to be an hour. That's what we're looking at to trade this strategy with. And the style this time, we've got an upper band of 70 and a lower band of 30, and that's really important because that's how we're going to make sure that we are in a deep enough pullback to be looking for really good entries with this strategy. So once we've got them in place, what we're looking to see then is so whenever price is above the 60 here, in the grey we're considering that to be bullish, we're looking for longs only. And when we see it below, like down here, we are looking for shorts only. So that's the first thing you want to look at whenever you're looking to get into a trade. Are we above or below the 60 and 40? And if so, that means that we're only looking for one specific thing. What we then want to see is we can drop down to the short-term trend down here. And what we want to see then is we want to see something like this little red spot here. Let me just highlight that down there, because that then is indicating that we are in a short-term pullback. So we're moving up. You can see here we're above the 60. We're looking for longs, and here this is indicating that we're in a short-term pullback. So that would be an ideal time then to go and look at price action, which we're going to take a look at in examples in a minute, and look for our entry pattern then to get into a long trade. Now let's take a quick look at a couple of examples in actual price and discuss what we are looking for in the price action to then validate an entry for ourselves. So I've got quite a simple example first. So as you can see here, we've clearly just turned around on the 1 hour, and we're going into an uptrend. It's quite early on in the trend, so that's really good. That's what we're sort of looking for, and the trend has started moving up. That's really nice. The yellow line's coming up nice and sharp. And as you can see here, we've got to this point where the yellow line has just crept above the 60, which means that we are valid now to start looking for long entries within price action. But what we then need to see, the second step, is to drop down into our short-term trend RSI and look for it to become oversold. So we're looking for a strong pullback. We've got that here, obviously, as the price has gone red there. So then what we then look for with this strategy when we're backtesting it is we want to see the next candle that takes us back into the 40, if that makes sense, to show us that we are looking to turn around and start moving back up. Now, it's an obvious example because we've got price coming down here. It's obviously red there, and then the next candle takes us back in, and sorry, I should say it's also got to be in the direction of the trend. So we wanted to see a green bullish candle there, which we've got. So that's going to be our entry candle. Our stop loss then is going to be the lowest low of the last 5 previous candles. So if we count them out here, it's quite an obvious one again, but 1, 2, 3, 4, 5. Obviously our lowest low is here. So that is going to be our stop loss. So our entry will go on the close of that candle. We've got confirmation from both RSIs, we've got confirmation of the price action, we have a clear and obvious stop loss. And then for this backtest, just to keep it simple, I just kept it to 2 to 1. Obviously, if you were to go away and backtest it, feel free to use as much or as little as you want. I'd play around with it and see, because as you can see in this trade, this would have got straight away up to sort of a 6, nearly 7 to 1 risk reward. Let's take a look now at a short example. I've picked this one because it highlights a little bit better the stop loss that I was just discussing then. So as you can see, we're quite clearly in a clear downtrend here. Price is moving down and making pullbacks. And the RSI, the long-term RSI, has moved below the 40 line. So we are now very open to be looking for short entries. If we come down then to the short-term RSI, we can see here that we jump above the 70 line. And that's really important then, because that means that we've got 2 verifications. We can drop into our charts now and start looking for our price action to indicate that we have a valid short entry, which we get here. You can see that we have a candle here that is moving back in the direction that we want to go, which is short. It's come back inside below the 70 line, back into the area. So that there is a very valid entry. Now, as we discussed before, your stop loss then goes at the lowest low or the highest high of the previous 5 candles. So here we've got 1, 2, 3, 4, 5. As you can quite clearly see, this is the highest high of those previous 5 candles. So that will then be our stop loss. Now, this I think is a good example because it was a loss, and it's really important to recognise that no strategy is 100%. You are going to take losses, but that would have been a very good, very valid setup to take. Would have been happy taking that, and we would have accepted a loss as it came. To the exciting part, which is the results. I'm going to be using TradeJournex to go through the data. I'm not sponsored by them or anything. I've just used them now for quite a while as both my trading journal and also for my back tests or any prop firm simulations that I've needed. And I found them to be really good, and they're not expensive, and I'd recommend them to anyone. Anyone that is interested, I'll leave a link to them in the description as well. I'm not affiliated or anything, but I do think they are useful for most people. So let's start a new backtest. We'll call this Dual RSI Strategy, and then we can just drag and drop our results in, which are all here, and then create backtest, and it will just go through and give us all the results back, and we can take a look and see what we've got. So here they are. As I said, I've done it over the previous 12 months. So we've got 2025 and 2026 from June to June this year, as recently as I could get it. So as you can see, we'll take a look down here first. The total return is fantastic. It's 36%. That's really solid for quite what I would describe as quite a low maintenance strategy. You can use it with alerts and things like that. So 36% return across the year is really, really solid. We've got 48% gross profit and just 12% of losses. We took 36 trades, 24 winning, 12 losing, which was a 66% win rate. That really is great. You can't ask for much more than that, to be honest with you. And what, for me personally, I always look for when I'm backtesting something is the max drawdown, which, as you can see down here, is just 2% drawdown. Again, that's really solid, and I would be really, really happy with that. Let's take a look around a little bit. So days of the week, not really much to report here. Very solid every day. There's no real outliers there that we could refine on. Tuesday obviously being our strongest day. Interesting to see Friday at 8% as well. Sometimes Friday for me personally is a bit of a weaker day. But Friday there, yeah, still really strong. Clearly people getting out of positions and things like that, wanting to join any trend. We can take a look at the monthly. If we go to 2025, June was very solid. As you can see, all winning months. I believe it was all winning months in 26 as well. But June, yeah, really solid month. July as well. August, September, very quiet. Again, something that you often see. The market's going a little bit sideways then. But the really nice thing I think I found when I was backtesting this strategy is it keeps you out of sideways moves, and that's always really important when you're trading. You don't want to be getting whipsawed in and out of trades, and I think that is what this double RSI strategy really comes into its own, to be honest with you. October, November, December, yeah, very solid, 4%, 4%, 5%, and the win rate's always really strong as well. If we take a look then at 2026, very similar reading. January very quiet. That's fairly normal, to be honest with you. I find coming out the back of Christmas, the market's just finding their feet again. But then clearly we got into a trend here, and we were just capitalising on those pullbacks really nicely. And we had a really good run up until I backtested just the other week. And hourly returns. Bit of a difficult one here. I'll keep that here. A bit of a tough one in that there's not really any weak hours. You could obviously refine, so if we come down here, we could take out the 2 o'clock, but I think you get to the point then, really, to be honest with you, where you're just curve fitting, so I won't be too worried about that. To be honest with you, I can't really see a great deal wrong with anything there. I normally won't trade, if I'm trading Forex, I won't be trading between 8 and 9, but as you can see, there were no trades taken in that time anyway, so yeah, that's fairly solid. In Trade Journex, you can filter these things out to try and refine a little bit better, but I can't really show you that today because this is a really solid back test. Nothing really to comment on, to be honest with you. I did find, as I said, that it kept you out of sideways moves a lot to avoid whipsaws and things like that, and that's something you always really want to be looking for, especially with these trend trading strategies, because that will, if you get caught in a sideways move, taking longs and taking shorts and taking longs and getting stopped out all over the place, you will find very quickly that those good long trends that you make profit on will soon be eaten up very quickly. So this was really strong at keeping you out of those moves, and I was really pleased with that. So yeah, that's the strategy. I would advise everyone to go away and backtest it. You've got the examples there, so you know what you're looking for. And yeah, let me know down in the comments what you think of it, what results you've got yourselves, any improvements you found that maybe I missed. That would all be really useful, I think, for the whole community. And as I said, I've got loads more coming, so if you can hit that subscribe button and give me a little like as well, that'd be really grateful. And yeah, happy trading everyone, and I'll see you next time.